Welcome to the 10th anniversary of REIMAGINE 2021. Presented by Mousebelt. Coming up next.
Hello, everyone. Welcome back to REIMAGINE 2021 version 10. So we've been doing these virtual conference events for the past year now. And, our aim is always to bring you the latest founders, the latest in innovation, and, the just happenings in the crypto world. There's a lot of exciting stuff to catch up on. I'm Roshan Mirajkar. I'll be your host for this event. And I'm very excited to bring you a new guest here at REIMAGINE today. With me here today, I have David Vatchev, who is the venture development lead at R3. David, welcome to the show. And, to get started with things, would love to know, how did you get into the space, and, how did you first hear about blockchain?
Thank you, Roshan, and congratulations on your 10th anniversary. Thank you for having me. So, yeah, my career started before in traditional finance, in capital markets, and having spent most of my time there, watching the industry from the growth phase to very much a secular decline. And interestingly, what were some of the reasons why the industry started to go through the cost pressures and some of the regulatory pressures that were happening? A lot of that was happening at the front end, but really at the back end, technology and digitization was really taking over. And that really sort of got me interested to think about sort of where is the future going, where is the world going? And having left that and moving towards more working with startups on various different capacities and helping them from an advisory role as well as with strategy and business development, what got me excited was that a lot of these business models were popping up which had blockchain into them. And this was towards 2017, 2018, a lot of buzzwords were happening, but increasingly we started to see the value extraction coming from this, and we started to see some real world projects and this top of the stack value. And despite the headline price booms and busts that you see in crypto, the continuous investment into that space was extremely interesting, both in terms of the intellectual and the actual monetary capital moving into that space. Really got me interested. And one of the startups that I was working with over in the tail end of 2019 got me introduced to R3. What they were doing with the enterprise blockchain space, really pioneers in that industry, got me hooked, and was very fortunate to join then and loving it ever since.
Yeah, that's awesome. Everyone always has a different path in, but I think once people get in, it's hard to go back to traditional finance. But yeah, for sure. Tell us a little bit more about what exactly R3 is and Corda as well.
Yes, R3 is an enterprise blockchain firm. So we started originally around 2015 time, where we were a consortium looking at how to explore the benefits of blockchain and at that time Bitcoin, but really bring this into the world's leading banks and financially regulated entities. So we really want to see, this is a fantastic new technology. And what can we do with this? What can we pragmatically do with this? And with this consortium, we ideated on various concepts to say, well, what are the best things around this? What are this peer-to-peer transaction mechanism? How can we make this, number one, private and secure for these regulated enterprises, and then importantly scalable as well, so to be able to scale at the level of these large enterprises and the transaction volumes that happen if you think about something like a stock exchange. And this is where R3 and our distributed ledger technology platform Corda came about, and this is where it was born. So it really delivers trusted data exchange between parties. Corda is built around privacy, security, and scalability, and importantly, interoperability within our network. So today, industry-wide collaboration really remains at our core. This is really our bread and butter. We now have other offerings around this concept of trusted data exchange, namely Conclave for confidential computing. And we continue to lead the world's largest enterprise blockchain ecosystem. So we have 400 plus members now, be corporates, think startups, regulators, cloud providers, systems integrators, and indeed tech firms. So really, really at the heart of blockchain and innovation.
That's awesome to hear. There's a lot of interest from enterprises right now. So it's great to hear you guys are, have a wide range of products kind of from the top down. Specifically, I'm excited to speak to you here today because you lead the you're the venture development lead for your venture development program. So tell us a little bit more about the structure of that and even some of the past startups, if you have any interesting stories.
Yeah, so really this is what got me interested, of course, in blockchain and how we did it with the startup innovation side of things. So R3 is, of course, an enterprise blockchain firm, but our venture development program is really the gateway into this wider 400 plus member ecosystem for early stage startups. So we really had a look at this and said, right, what can we best do to support this startup blockchain innovation? How do we help them find product market fit? How do we help them get production ready fast? How do we accelerate their go-to-market strategy by connecting them with enterprise customers and corporate partners? How do we help them connect to a wider investor base as well to get funded and be able to accelerate their growth prospects? So this is really what our venture development program is. It's a cost and equity free program, which is supported by this international team. We're a global team here. And we have global industry experts around us to help these startups progress. So we really lead this initiative and from a global lead perspective from each different region. And we have very much akin to an accelerator incubator, weekly events and workshops and mentor office hours by industry and enterprise leaders. We have over 200 plus mentors within our network. We have access to R3's corporate partners. We have partnerships with other high quality accelerator incubators to co-support these startups with us. We also have sponsored industry challenges where our enterprise partners say to us, look, we need a specific use case being sold. If somebody can provide this for us, we can get into a commercial partnership with them. So we help to facilitate this. Extreme diverse range of startups. We have over 600 plus globally in our cohort. I'll give you some sort of examples to illustrate the diversity of some of our successful startups. We have ProCredX in the US, which verifies credentials for healthcare professionals in the US. So think if you are obviously a medical professional, a doctor, you need your credentials and they need to be verified. You need to translate those from different hospitals or medical providers that you go for. And of course, blockchain is an ideal use case for that. So they, of course, leverage Corda. We have HQLAX in Europe, which allows banks to manage their high quality liquid assets. And they recently raised a very successful Series B led by a consortium of large banks and exchanges, which are part of our ecosystem. And another interesting one is Blue Box, just to keep things even further afield in the interesting space. They leverage Corda to manage music copyright information. So if you imagine in streaming, how much multi-billions, I believe the last estimate was around $2 billion, is lost in royalties for artists this year. And this is the gap that Blue Box addresses. So some really interesting and diverse business models coming from our Corda startups.
Yeah, it's exciting to hear that it's kind of a global program. As everyone knows, you can be anywhere in the world and work on blockchain products. What are some of the biggest challenges and problems do you think like current startup founders are facing right now?
Yeah, and we get asked this question quite a lot, and a lot of people pass this to, or I guess look to this problem towards, what is it within blockchain startups? The reality is, if you look at this, and we've looked at this a lot in terms of structuring our program. 9 out of 10 startups fail. It's just statistics. And the primary reason for that, CB Insights have done numerous analysis on this with various parts of failure, is no market need. Now, whether you're blockchain or not, the situation is still very much the same. And this is a huge, huge problem. And it can be avoided right from the start by validating with end customers. Is this solution needed? Is blockchain just a buzzword within there? Are these various other emerging techs likewise an accelerator enabler versus the be an end all? So typically, where startups succeed is when they start with that customer validation first. Don't build anything, on ledger or vice, but understand what pain point are they really solving? Will customers pay for this at scale? And can they feasibly produce this? So once they've verified that, and this is part of the work that, of course, we help them at that early stage, then their chances of success are that much maximized. To answer your question, where the failure becomes, most of the time, even regardless of what's happening in current market pressures, the real failure comes because they've not done that. They've just thought, this is a needed problem, we'll start to build. Of course, cash becomes tight and there's no customer at the other end of it. And then very soon the drive and that initial innovation just fizzles out. We see this over and over again. And this is something we try to really help hone down that business case in the right from the early stages.
Yeah, I mean, that makes sense to me, in terms of a lot of these crypto and blockchain projects, they should be seen as being evaluated by the same, metrics of success, so to speak. But on that note, what are some of the metrics you look at that point you to a successful project? Tell us, like, what is same between, the crypto and the TradeFi world, and what is different, like metrics that are completely brand new?
Yeah, it's interesting. And in fact, the two worlds are increasingly coming together, from a high level, especially a lot of the work that we're doing around central bank digital currency and various other drivers to this shows that there is an angle to all of these aspects. So if you imagine something which is issued via a regulated, so obviously the most regulated central banks into wholesale banks at the wholesale level, it's a very different use case to a consumer level where a wallet, which can also hold crypto and various other stable coins and DeFi tokens, it's a completely different use case. But increasingly, these two worlds are coming together because, of course, consumers will interact at different levels, and likewise, different layers will need to interact. So we're starting to see more and more of this coming together, definitely within our ecosystem and definitely within our startup community, which starts to do this. Where we find some of these sort of metrics for real success are very much if the project is driven around a DeFi or crypto angle in terms of adoption, is very much the network effect. So what incentive mechanisms have they done towards building a network such that an open source model is defensible? We definitely see that part of it. Many of our startups that we have, or increasing number, I should say, are leveraging both public blockchain for example, a token issuance or a network effect. And then when they need to transact business and do this with an enterprise, then they use Corda and our functionality for that privacy part for this. So we see both ends of the layers. Where we see the most successful metrics are at the incentivization there, getting that network effect, getting those users and locking them up. So despite somebody else coming up with a slightly superior protocol or a way to do things, the network effect is already there and the liquidity is already there and it becomes self-fulfilling. So that's one aspect of it. From the enterprise layer and from the actual go-to-market strategies, the most important thing is an understanding of the customer needs, especially when they're an enterprise customer, because here you don't have that many customers, you have a few targeted ones, and understanding their needs is the biggest driver of success we found, something that aligns with the customer success journey, as well as helps integrate the product easier into the customer's very complex tech stack and long business sales cycle. Those two things by far are the biggest drivers of success metrics that we see.
Yeah, love how you said incentives. Actually, I think it's a huge part of what drives the entire blockchain and crypto economy. It's pretty strong and unique to our space. But from maybe your view in general, tell us, what do you think is important for enterprises, in terms of how much exposure they're getting into blockchain and crypto? Like, do you think, other companies out there are starting to have their own programs like R3 has, or do you think they'll just, get exposure in a different way from maybe mergers and acquisitions?
Yeah, it's an interesting question, and one we obviously ask ourselves a lot. And because we started off as this consortium of enterprises, we have this ecosystem where we have these open discussions with them. So we are very much ourselves customer led from what's needed. What we found is, like everybody else, the recent year has accelerated digitization dramatically. So this has, as I mentioned previously, from the top down with central bank digital currency to the consumer level with the rise of cryptocurrencies, and then obviously the exponential growth in DeFi has really brought this to fruition. What we're really seeing is this paradigm shift of, before people had to use an innovation budget around blockchain, it's increasingly becoming another layer that has to be done within the digitization. So it's the need is certainly becoming far there. Increasingly now, the next stage of this is being able to find those delivery partners and the expertise to be able to do this, because the in-house expertise is just not there at that many enterprises, and it's increasingly becoming so. And this is certainly, something which we've been positioned for right from the start, and what we've been trying to work towards from the early stages. How people are sort of looking at doing things at the moment is, if a startup, particularly if an institution wants to transact in, say, crypto or DeFi projects, a startup could potentially provide an easier route or access to this, but you at the same time also lose so much of that ability to regulate and to KYC and to know your customers. So this is really the trade-off around how, to answer your question, enterprises are interacting with this. So at the business level, they continue to leverage blockchain, like, for example, the Italian banking sector does for interbank reconciliations with Corda. This is something which is a completely different use case and brings about the leverage of blockchain as a technology. For other growth projects, such as DeFi and crypto, very much they try to do a parallel offering to understand this is the risk parameters, but we can segregate them over to here and know where we stand, and hopefully maximize the growth potential, especially for their end customers, which is clearly where the demand's coming from.
Yeah, and you're definitely right. There isn't enough talent, for all the companies to have their in-house talent right now. But my hope is that over time, each company recognizes the importance of it, as R3 has. Because I think it's really important to also hire people like who are already in the space and embedded to really get the culture and the entire philosophy. But going back to specifically talking about solutions, what are some of the core use cases of Corda and some of the solutions you offer?
Yeah, so I guess the industries where Corda complements the most and where we were designed for are threefold, and it's really ultimately enterprise regulated enterprise use cases. So if you think sort of banking and financial services, so Corda was purpose built there right from the start. So the banking space is really 4 times more heavily regulated than the pharmaceutical industry. So just to give you an idea of how heavy that regulation is and how ingrained that is within the entire ecosystem. So banks can transform cross-border payments and things like treasury management with digital assets. They can streamline client onboarding with collaborative KYC and AML solutions between each other, and of course can construct these future payment rails that incorporate these digital assets. So there are partner customers, things like DTCC, as a lot of people now know with the recent GameStop thing, how much actually the clearing and settlement of equities is important. We've had things like Wells Fargo and MasterCard and NASDAQ. So, as I mentioned, about 90% of the banking sector leverages Corda. So this is a huge use case. Then we also have insurance, which addresses a lot of the end-to-end issues which in faces insurers. Again, you're really trying to streamline operations and lower expense ratios. Things like claims can just be processed much quicker. You can understand exactly where the liabilities fall. Again, all this can be automated and the process efficiency increase. So things like B3I Consortium, which is owned by 21 insurance participants around the world, is a good example of that. And then finally, trade finance. So this is just a very opaque and fragmented industry. Again, it's sort of heavily dominated by paper processing and multiple participants along a transaction lifestyle. So this is where something like a blockchain is an ideal use case, where you can remove so many of these intermediaries and extract so much value and new efficiencies. So things like Marco Polo and Consor for digital letters of credit, automations, and the digitization of workflows. These will be prime Corda and R3 use cases.
Yeah, you're totally right. There's a lot of inefficiency still in the traditional finance system, and a lot of people, have two viewpoints. One is either they're going to get disintermediated, or they're going to catch up. So what's kind of your view on that? While you're offering these solutions to all of your partners, do you think that a lot of the legacy business models of how companies have only made money from fees and custody, really not really even providing any application value, do you think that's going to change, or will they exist and just adopt blockchain?
Yeah, and your question really touches on a very important point there, which is a lot of people say, well, why has X innovation or digital transformation taken so much time away, isn't it? And the reality is, it's not the technology. As you mentioned, a very valid point. There is certainly a gap in hiring talent, which can be addressed as long as the incentives are there. But the real question here are the incentives, and where are the multiple stakeholders in these old industries aligned, and what's their workflow? So the inherent nature of a disruptive technology is obviously it removes these inefficiencies in intermediaries, and very much those legacy processes are still being hung on to. In terms of the wider inefficiencies, they're still there, but there's a lot of multiple stakeholders still stuck in their ways, and that takes time in order to progress. So this is a lot of the reasons why progression takes so much time, but increasingly companies are seeing the benefits on the other side and are starting to realize there is a better way of doing things. As more and more of these projects become live, as more of those become production ready, and we see the use cases and the examples of this, and we're starting to see this popping up from different parts of our ecosystem, the more incentives there are for these other organizations to move forward and leave the past legacy systems behind.
Yeah, I think that's pretty interesting. There's some hybrid companies doing both. There's some companies who are kind of going all in. But how do you think public blockchains and private blockchains can kind of connect with each other as more institutions adopt blockchain? I've seen a lot of them, just make private blockchain. So can you kind of paint us a picture of how do you think the world would look? Is it going to be multi-chained, or everyone using one chain?
Yeah, it's a big talking point, and it grows about your question around the adoption of blockchain more generally. So, okay, once you decide and you're committed to removing these intermediaries and the process, then you go to, well, what blockchain should I choose? It's very much a sign of times, the fact that this is still a very difficult question for people to decide. And it's something, of course, different use cases have been carved out, which is the way the industry is. And we view this as very much a case of holistic growth in the market. There's some cases, and this is where Corda and R3 serves for the use case of private permission blockchain. So very much in these regulated industries, that is still the case. This is private information that cannot be disclosed or shared out there openly. It has to be. Corda is peer-to-peer, and we very much protect who's in the network on a need-to-know basis. And at the same time, scalability is an issue for these. But if you look at your question more holistically, conceptually, public and private working together is very similar to the way private companies operate their own intranets within the company, but also, of course, connect to the public internet. that still happens, and that happens all the time, and there's nothing wrong with that. So some files, documentation values sit behind the wall, and others are happy to be more public and released. And that's the model of the way blockchain will also evolve into layers, is more interoperability. There's the best way that blockchain can grow is to leverage the best combination of both of it. You know, public blockchain gives you that openness and true decentralization, and you have a wider network, and you're able to leverage those tokenomics to incentivize and align users, developers, and indeed investors with that token value. Private blockchain just allow for trust and transaction resilience. So only verified parties can participate, and KYC, AML, legal enforceability, and underlying regulatory frameworks can fit in. So aligning the two together gives you the best of how this works. And as I say, we see more and more enterprises thinking this way, and likewise more and more startups setting up business models to align with that.
Yeah, they're two completely, different schools of thought per se. You have things like Bitcoin, which is more of a public blockchain, and then, like you mentioned, a lot of enterprises, it makes sense for them to maybe not solely rely on public blockchains alone. But in the past year, and even currently here in the US, and I'm sure where you are right now in London, there's been a lot of regulations, and they're all so different. So how much do you think, what's the regional impact for people building blockchain projects? Like, do you think that we should have a uniform regulation, or how can we sort of improve this part of the industry?
It's very difficult to, even though that would be the almost easy solution for that, is to have a global regulatory standard and one size fits all. As we know from normal laws and indeed regulations, it's all on a jurisdiction basis, and even within countries, of course, this is still the case. Now, in terms of blockchain, and let's give the example. So again, to delineate the two, the way we work at Corda is code is not law, like law is law. So very much we work with the legal and regulatory governance and the frameworks that's been given by the country or the jurisdiction or indeed the asset class, and follow on that. And the code simply aligns with that. And so all of that is really abstracted away. There isn't really a need for that. But now, if we take this into the public blockchain space, things get a little bit more complex, because especially as a decentralized protocol, what is there to regulate? Who is there to regulate? And in what jurisdiction? It's inherently global. So it's very difficult to set laws or legal frameworks around this. And where the only layer at which there can be some kind of regulatory certainty is perhaps at the centralized layer on the top, which sits at the user interface or the parent company that has a restriction for this. And you see this increasingly popping up, where when there is a central entity which is doing something which is, for example, classed as a financial asset class, the SEC and various other regulators in different countries say, well, you've digitized something, you've tokenized something, but ultimately the underlying or the representation of it is a financial asset class. So it falls under those rules. But if there's nobody at that central public interface, consumer interface layer to regulate, you can set as many laws as you like on different parts of it, but there's just a decentralized protocol. So this is really what has to be accounted for in the public blockchain sphere. And this is why regulated entities are still very cautious of interacting in that space.
100%. And I think even from technology perspective, there are a lot of people trying to figure out, in a lot of jurisdictions, like, is the code even valid? Are smart contracts even valid? I've seen some jurisdictions like even reject that. But even kind of zooming out for a second and kind of talking about a different topic, what's your view on ESG and impact investing? How how can we use blockchain for good?
Yeah, a big topic, and obviously the recent antics of Bitcoin have brought this into focus for people. But I think on the good aspect is it's brought this into awareness. What Bitcoin and what blockchain is and what it isn't, and that's helped to educate a lot of people, and it has moved the conversation forward. So ESG is a huge topic. The environmental impact of things and people and industries is becoming a greater focus. From my work before in the financial industry, and now what we see from our enterprise customers is it's both a environmental impact as well as a financial impact, because positive ESG ratings assigned to companies, to industries, to investment funds have a superior outperformance. So everybody's incentivized to move that way, both for the environment as well as for financial gain. So it's a really a win-win scenario. Now, if we look at this and perhaps just taking a step back of what this is for the audience, really how Bitcoin, going back to the original white paper, that was designed is obviously a peer-to-peer transaction mechanism where we provide cryptographic proof that a transfer of value has happened without this need for a central intermediary. So we disintermediate the entire financial system and allow it to happen. But in order for that process to happen, a huge amount of energy has to be consumed, an increasing amount, as the network grows and becomes more secure in a process called mining and validation. And that's really this proof of work algorithm. And that's really just specific to Bitcoin. So this is a huge topic, but it's very specific. Most chains are now beyond that, and even Ethereum is obviously moving to a proof of stake, which isn't necessary at all. You simply put up as collateral your holdings to be able to provide that same verification mechanism. And likewise, there's even newer mechanisms which are coming out. Obviously, some like Solana and some of the others have moved further on that. Corda is not a blockchain at all. It's really a peer-to-peer distributed ledger technology. So we avoid that completely. And it's really brought to the public awareness that, in fact, it is only a Bitcoin issue that this is big. And it is a big issue. And it's just one that should be noted. Now, where this is more holistically a more open conversation and a more interesting one is if you think about generally various other processes and how much energy they consume. So I'm thinking manual reconciliations, printing out of papers, things like going back and forth with intermediaries, the amount of energy consumption of those and the impact that something like blockchain can do is inherently very positive. Removing out those intermediaries, removing out that reconciliation process has a huge positive effect. So blockchain in general is very, very positive and supported towards ESG initiatives. Bitcoin is not currently as things stand, but again, increasingly, just like with a lot of blockchain and incentivization mechanisms, as we can see from the movement of Bitcoin mining facilities from China into more ESG friendly facilities when the hash rate drops, again, things incentivize and adapt to help things. And this is really sort of the real benefits of that public open ecosystem, because the incentive mechanism will shift to where we align things that work for everybody.
100%. And I think that was a great comparison. I really love that. I would love to see in the future, maybe there's a report that compares exactly what you said. And maybe we can host this kind of on chain and see everything be transparent, like what actually takes more energy. But for viewers out there, I think that was a great distinction. And yeah, to kind of end things off here, what makes you the most optimistic about the future of blockchain right now?
What makes me most optimistic about the future of blockchain is the amazing amount of public adoption out there, which is really, really great to see. It's not just seen as what is blockchain anymore, what are cryptocurrencies, what are this, really, it's now become second nature to people to really understand more of this, which is exciting. And the biggest thing which sort of I feel is coming, and I think conceptually more and more people will start to understand, is how much the previous world of the internet gave us this abundance of information, the transfer of this information. But we really lack this transfer of value in a secure mechanism. And more people are starting to grasp that concept now. And it's really great to see when people understand how we're translating real world value to digital value. Now this is becoming more and more a concept that people are thinking about, getting excited about. And you're seeing these business models and these interesting concepts around, call it DeFi and call it NFTs, hitting these consumer use cases, and that's really exciting to see, because you're starting to see that top of the stack application and value creation, and that's really where users and most of the world's population will start to see the benefits.
Exciting times for sure, as more consumers, start to learn about the technology, and like you said, they get more positively impacted by it. And my final question to end things off: what are some key pieces of advice for entrepreneurs and new builders coming into the ecosystem?
I'll reiterate the advice we started off, and we keep reiterating this again, but it can't be said enough, is please, validate with customers first, create a needed solution and test that market first before you build anything. This is it. So number one, do this. Number two, surround yourself with an amazing team who can execute that business model. And number three, have fun in the process. Being a startup founder, whether it be blockchain or anything, is a very tiring and many times stressful process. So try to enjoy it as best you can, and enjoy the journey as much as where the destination is.
Great advice, 100%. And how can people connect with you and learn more about R3? It was a pleasure speaking to you here today, David.
Well, thank you so much, Roshan, for hosting me. And, please feel free to connect, of course, with anybody on LinkedIn, and sign up to our flagship conference, CordaCon, for this year. We've got 100+ sessions and networking opportunities, and it's hybrid this year. So we have sessions which is all in person in London. And then we have another 2 days, which is virtual. So this is the 28th to the 30th of September. So please sign up, and hope to see as many of you there as can make it.
Awesome. Wishing you the best of luck. And for those of you who are still watching, stay tuned. We're bringing you more interviews here at REIMAGINE 2021 version 10, and check out our YouTube library for all our interviews. We've done over 500 interviews. So thanks to our community and all of our great partners and speakers for supporting us. And I'll let you all tune back into the event. Thank you.